Snowflake is expected to start trading on the New York Stock Exchange on Wednesday, September 16, and there is so much excitement about its prospects. Salesforce Ventures and Warren Buffett's Berkshire Hathaway have already placed orders for the IPO shares. Will Snowflake live up to the hype being generated? What are its financials pre-IPO? And is it a good prospect for you and me to invest? Please join me in this video to take a deep dive. Hi, I'm Arshad Ahmed, founder of DIYStockpicker.com. Snowflake plans to raise $2.7 billion in its IPO. It already has orders from Salesforce Ventures and Berkshire Hathaway. This has generated a lot of excitement from investors. The IPO shares are planned to be between $75 and $85 per share. Snowflake is a cloud-based software as a service company. The recent dizzying performance of cloud-based companies have raised a lot of expectations. Snowflake was founded in the year 2012 in San Mateo, California by 3 data warehousing experts. It's a cloud database and analytics service termed as Data Warehouse as a Service. The interesting thing to note is that the founders did not run the company as CEOs. Instead, they hired capable and veteran executives from outside. Microsoft executive Bob Muglia ran the company as CEO from October 2014 for a period of 5 years. Current CEO Frank Slootman was just hired out of retirement in April 2019. He has extensive executive experience and was formerly the CEO at ServiceNow, the leading cloud-based backend software provider for large enterprises. Frank is highly regarded, and just 6 years at ServiceNow, he grew the company's revenues from $75 million to $1.5 billion. The fact that Snowflake was able to lure him out of retirement speaks about its prospects. He now owns 5.9% of Snowflake. Snowflake would gain a powerful ally in strategic investor Salesforce, the customer relationship management giant with a market capitalization of $165 billion. Salesforce participated in the funding rounds. Sequoia Capital is another venture capital firm that participated in the later fundraising rounds. Valuations are as follows. In January 2018, a unicorn valuation of $1.5 billion after raising $263 million. In October 2018, Snowflake raised another $450 million, raising its valuation to $3.5 billion. The company raised $479 million, raising the valuation to a staggering $12.4 billion. The cloud data platform enables customers to consolidate their data, drive meaningful business insights, and share data. The customers are charged only for the resources they use. Data is delivered using the cloud model. According to their prospects, they put the market opportunity for their cloud data platform at $81 billion as of January 2020. According to IDC, a research institute, the market for analytics, data management, and integration platforms will be $56 billion by the end of 2020 and $84 billion by the end of 2023. Snowflake believes that the opportunity is substantial and the market remains largely untapped. Capital One, Adobe, Cisco, and FactSet are among the bigger clients. Taking a look at the financials, Snowflake had a product revenue of $95 million for the fiscal year ending January 2019 and $252 million for the fiscal year ending January 2020. A net loss of $178 million for the fiscal year ending January 2019. A net loss of $348.5 million for the fiscal year ending January 2020. 3,000 customers with 56 $1 million plus customers. Taking a look at the IPO facts, the total Class A shares offered are 38.3 million, out of which Salesforce Ventures is purchasing 3.125 million shares and Berkshire Hathaway is purchasing 7.125 million shares. Total Class B shares of 240 million. Class A and Class B shares combined together for total shares outstanding of 278 million. Shares priced at IPO between $75 and $85 per share. For a midpoint price range of $80 per share, the company valuation comes at $22.2 billion. The total capital raised at the IPO will be between $2.7 billion and $3 billion. Coming to the risks, a lot of growth story has already been priced into the IPO. Any future revenue contractions will have a significant effect on the stock price. Also, the company has a limited operating history. There is no indication that it could achieve profitability in the next 2 to 3 years. The cloud providers on which the cloud data platform runs control the operating costs for the company. After the lock-in period ends, the employees of the company will convert their options into stock that will result in dilution for the current shareholders. Amazon AWS has its own data warehouse as a service product called Redshift, which will be a competitor for Snowflake. The management has not laid a clear plan the way they will be using the capital raised during the IPO. They vaguely say that they would be using the money for meeting working capital expenses and having acquisitions, but there is no acquisition in mind right now. We see that the IPO has priced the whole growth story. Any error in execution would result in a significant decline of the stock price. Warren Buffett usually does not invest in IPO shares. His deputy Charlie Munger has famously said that there are very few bargains in the IPO space. However, for Berkshire, $500 million is like pocket change as it is sitting over $130 billion of cash. But for retail investors like you and me, that is not the case. So I would say it's better to stay out of this IPO and watch it from the sidelines. And in the future, if there is any market contraction, that would be a good entry point into this company. Hope you enjoyed this video. Please subscribe to my channel and like this video, and I'll see you in the next video. Till then, take care.